Happy Thursday, everybody. Thank you so much for joining in and tuning in this week. I'm super excited to be doing the show tonight because I have a guest speaker who I thoroughly trust. One of the few lenders that I do genuinely trust front to back to give me their thoughts, to tell me what's going on. And one of the things that I love most about him is he will tell you not to buy a house if it's not the right thing for you to do. So first off, you guys tell me where you're tuning in from. I would love to see, where you guys are tuning in from and just have your thoughts, questions ready to go. Betty Ayers from Sugar Hill, just down the street from me. It's good to see you tonight, Betty. Hope you're doing well. But you guys drop any questions or comments that you guys have. Let me welcome to the stage Tyler Pate. So he is a lender that I work with quite often. Many of you probably have already talked with him or worked with him in the past if you've worked with me. Tyler, how are you?
Hey, I'm doing excellent. How about yourself?
Doing good, man. It's a Thursday night and soccer's over.
That's good. I wish I could say the same about softball, but we got a big tournament on this coming weekend, so it's
Oh
never
man, do
ends.
y'all play through Thanksgiving?
We will stop. This will be our fall finale, and then
Okay.
we'll take a break.
Okay.
Softball is not life, so we need to make sure these girls realize that. So,
Right. Howdy from the Commonwealth of Virginia. Oh, I had family that used to live in Virginia, but they were more in Roanoke. So I think a little bit different area. But thank you so much for tuning in. Tyler, I really appreciate you joining us tonight and jumping in. Let's be honest, it's kind of a scary time. We've not ever dealt with anything like we're dealing with right now. I know you and I both went through 2008 being in real estate, but this is a completely different thing than we saw then. So tell me from the lending standpoint, like what are you seeing?
right now, yes, rates are kind of at their higher point. I think we believe we hit a 23-year high back last month. And, we've had some good economic news lately.
Yeah.
Inflation is starting to come down.
Yep.
And so we do believe that, rates will continue to slide down. Just within the last 10 days, we've seen rates come down from, just to give you an example, mid eights to
Yeah.
now we're kind of in the mid sevens.
Yeah.
Hopefully we'll have a few more good days and we'll be in the low sevens and the sixes before you know it.
Yeah.
Um,
How do you guys keep up? It feels like the rates don't change just day by day. They change a couple times a day.
They do, yes, they do. We have intraday price changes sometimes depending upon how the market's doing. But I would say, over the last few weeks, they have been fairly stable.
Right.
Yes, we did kind of hit that high point, but ultimately, rates aren't crashing overnight, but they're not going up overnight.
Right.
So it is very volatile, but we're going to hope that the continued improvement
Yeah.
continues, and we
Okay.
basically see rates continue to go down. Yeah.
So I know you and I were talking about this article, the US bond rally points to more affordable housing market. So tell me from, obviously I'm in the real estate sector. I'm watching as housing, like some of the things that we've really been seeing on the housing side is we're seeing housing stay on the market a little bit longer. Now, I want to preface that with a little bit longer doesn't mean a long time. We're seeing, maybe 30 days. So in my mind, being in real estate, that's a traditional market, right?
Yeah.
That's nothing like extreme. We have seen some price reductions. I think I was looking at this article the other day. It said the state of Georgia, there's like 20 top cities throughout the US that people are still, making a move to. And Atlanta was one of those. And we rose 0.1% over this last month over month trend. So not going back, but not making, a ton of headway, which for me, quite frankly, I'm a little bit okay with after the couple of years that we've had. So what do you think about this article?
Yeah, definitely. I really, it's all in regards to a lot of the reason why some buyers are out is just because of the affordability standpoint of it.
Right?
So we do believe that they are done with the Fed hikes, and ultimately, if they have stopped with the Fed hikes, ultimately you look about a 9 to 10 month average to when they start reducing that. And
Okay.
so, what we anticipate is that rates will continue to slide, making homes more affordable.
Yeah.
They've been getting the government since June of 2022 has been doing quantitative tightening. And so ultimately we're hopeful that that eases.
Yeah.
And then at that point, rates, that's good news for mortgage rates.
Right.
Definitely. So
So, what about the people? Because I know I get this a question a lot, of how can I time the market? And again, from the real estate side of things, I'm always thinking, well, if you're selling for a lot of money, then you're probably paying for a home that's also a lot of money because you're buying and you're selling and buying on that high side. And then if you're on the low end of the market and you're selling, then you're getting a deal on a home, but you're also selling yours for a little bit more. The only way I really see to do that is if you sell high and then you rent and then you
yeah.
buy, but now you're wasting money.
Yeah. Yeah, correct. And we're still in a supply and demand issue. And so home prices are going to continue to go up. Maybe not at the rates they have been, but
Right.
again, we are in Omaha, Nebraska. I mean, we're in metro Atlanta where
Yeah.
there are people flocking to, our economy and climate and just really regional location, daily.
Right.
And so, that supply and demand issue is a point where, getting back to, when is the right time to buy or sell, hey, I think ultimately if you're ready and you can afford it, I would buy. Ultimately, I think it's a great decision to buy now if your finances are set. So
Right. Because I know when we saw, just a couple of years ago, 2, 3 years ago, when rates dropped to such low, that was historically the lowest rates that I have not only seen in my lifetime, but I researched previous to my lifetime, and I never have
yeah,
seen anything that low in twos, threes, or even fours. Um, Fours were the lowest that I had ever seen it, and they were kind of, I don't want to say falsely done, but they were encouraged right after 2008
yeah,
because of the crash to try and get people kind of back out there into the market. And so I feel like that's kind of what happened after COVID. And
yeah.
so now we're kind of back to that traditional, interest rates that we had kind of been seeing for quite some time. Would you agree?
Yeah, I got into the mortgage industry in around 2005, and when I came in, rates were in the high sixes.
Right.
And we're almost there right now. So, from a grand scale, rates are still great. They
Right.
still are. I'm sure we've all heard our parents' stories, our grandparents' stories, depending on your age, about rates being in the teens. We
Yes.
do think that we hit the ceiling, and we're starting to come down from that ceiling.
Yeah.
And
Yeah.
so again, even with where rates are now, historically, rates are still great.
I know you sent me this right here, and I wanted to see if you could kind of share with us because when you sent me this to try and, I know I had a client that was on the fence, and we were kind of going back and forth of did it make sense for them or did it not? Because I don't want people moving forward on something that they're not confident with. And so
Yeah.
we kind of broke this. You were so awesome to put this together for them and just really make it make sense. So can you help us understand what we're seeing?
Yeah. So basically, this is the cost of waiting. And so let's say your mindset is, hey, I'm going to wait until rates go down. And so, if you look at kind of where this particular loan would set up today, let's say we have a $650,000 purchase. The client's putting down 20%. And then let's say, last time I checked, assuming credit scores and whatnot, but let's say the rate would be at 7.375. But they go ahead and buy now. But let's say that this client is like, hey, we're going to wait. We hear that rates are going to be dropping in 2024. So they decide to wait 6 months. Well, hey, let's say in this scenario, let's say rates have come back down a little bit. And so as opposed to 7.375, 7.375, now you're looking at 6.875. So
Okay.
yeah, the rate did get slightly better. But one thing to note is that with property appreciation, and that's a modest example.
Right.
Hey, I'm dependent upon the pocket neighborhood. It could be much higher than that.
Right.
And especially you got to think about when rates go down, there's probably going to be way more buyers than there are right now,
Right.
which is going to continue to drive that price up. But getting back to it, in that example, hey, just 6 months from now, that $650,000 home is now 672, 254. And if we continue on, wait a year, you can see that the property value keeps going up. So your purchase price is going up.
Yep.
Now, yes, in this example, we don't have a crystal ball, but let's assume rates do continue to slide downward. Rates aren't going back down to 2 or 3% anytime soon.
No.
If anything, maybe they settle in the sixes. Maybe we see high fives, but honestly, I haven't heard high fives. I've been hearing more somewhere in the sixes. So
Right.
these are pretty good. These are pretty good examples given. But really, the main thing is you kind of focus on, your cash to close down there toward the bottom.
Oh,
You
yeah,
know,
right here.
yes, I mean that number just keeps going up
Yep.
because again, the 20% down payment is staying the same, but honestly, what's changing is the property value. And
Right.
so, yes, you may see a slightly lower monthly payment, but if you really get into it and you think about, hey, I'm building equity from day one as
Right.
opposed to waiting 6 months, hey, you missed out on that gain in equity.
Right.
You missed out on that appreciation in that home.
Yeah.
So, I mean, it's kind of hard. Obviously, we always want to say we can time the market, but I mean, it's
I know.
tough. I mean, it's to the point where if you can find a home and financially you're ready to buy, I
Yeah.
think now's a great time to buy.
I
Um,
agree because I'm nervous for people that are waiting. And I know some people right now, the increases in interest rates have kind of put them out of even being able to afford it. They were so tight to begin with that when things change, it's either made it unobtainable for them or it's put them into a bracket that they were not really wanting to be in. And so I get that. And those people, wait and see what happens. But for a lot of people, I feel like they're just trying to, like you said, time the market. And then if they're waiting, then they're back into those multiple offer situations. They're overpaying for a house. They're waiving contingencies again, which, I do not like that factor. That is not a good way of making what is probably the most expensive purchase of your life to date. I definitely would love to be more in this market where I can focus on what I'm doing, talk to a lender, make sure that I know what I'm getting myself into, and then make an educated decision because I don't have quite as much competition.
Oh, 100%. Yeah. Just, rewind, I guess, what, 8 months and just the no contingencies, really quick closes. I mean, that
Yeah,
was scary. I mean, you think about it. I mean, that was scary. And I'm
it
sure
was.
there's some homeowners that are extremely happy with it. And then some that, hey, maybe they're just now finding out about stuff that maybe they
Yeah,
didn't have time to uncover. So
absolutely.
I'm not ready for it to get back to that, but
No,
but when it does happen, we'll be ready.
yeah,
And that's just the nature of the market. So
it is. I mean, I pray that 2008 doesn't happen and I pray that 2020 doesn't happen, but we
yeah,
definitely took away and learned a lot from both of those. And, kind of talking about 2008 and 2020, you know, I can't help but have a lot of people ask me about the lending side of things. You and I were in it together. I think we both got into it in 2005. So we had a couple of great years and then it was kind of like the bottom fell out.
yeah,
And a lot of it was caused by the real estate world, by lending practices that may have not been
yeah.
exactly up to par. And so, now that interest rates are coming up and a lot of people are, hearing, well, the world is crashing again. We're going into a recession, or now they're offering, these buy downs and 5-1 arms and 2-1. And then people get scared because they hear 2008. But I've been talking to you about some of these programs and they sound completely different. Can you tell me about them?
Yeah, definitely. At the time I worked for a bank, and so I never really got into some of those kind of shady type loans that were back had that you could get back in those days. But
Right.
but there were some out there. But even working at a bank at the time, we still had loans called no income, no assets, and stated income, stated assets. And really, it's to the point where if the client knew what they were doing, meaning they were trying to be fraudulent on the front end. I mean, it was
Right.
easy as long as they had a good credit score. But hey, so many things have changed since then. Now we are all licensed. I have a NMLS number where we didn't have that. I mean, so we have much more regulation in the marketplace, which is a great thing.
It is.
It's a great thing. So all files are underwritten in some capacity. I mean, we
Okay.
have regular straight conventional loans. which is more or less between the two of us. I mean, that's kind of our bread and butter.
Right.
But there are still loans out there for maybe self-employed borrowers, but it's a bank statement loan, so their
Yeah.
bank statements and their credit is still being underwritten. It's not like the old days where, hey, if somebody's got a pulse, we can give them a loan.
Right.
So, those days are gone. And again, that's a great thing.
It is.
But from comparing 2008 to 2023, I mean, completely different scenario. I mean,
Right.
right now, and you probably have more figures on this than I do, but I'd say 90% of homeowners across the United States are sitting on lots of equity right now.
Yes.
And so I don't think we're going to run into a situation where foreclosures are going to be peaking and everything in regards to that.
Yeah.
So, um,
No, I was actually pretty surprised when I was looking at the numbers, and I talked about this on a live a couple weeks ago of how many people it's a fairly large percent of people that own their home outright. They don't even have a mortgage on their home. And then there's another large percent of what's left that have a mortgage under 4% or less. So if you're looking at those people, I know a lot of people are like, well, we're going to see foreclosures happen. I'm not going to say that we're not going to see any.
yeah,
It is a natural thing that constantly occurs. It's just not talked about all the time. I think people only
yeah,
talk about foreclosures when they see like that rush that came, 08 to 2012.
yeah,
Then people talked about foreclosures. Foreclosures happen on a daily basis, unfortunately.
yeah,
People's lives change or something happens, but we're not seeing that rush of them. And I don't see it coming down the pipe just because so many people own their home outright or have an extremely low interest rate, which on the flip side is causing a little bit of an issue because that's holding up, inventory, which is not allowing homes to come on the market for people to have the option to purchase. A lot of times we were banking on the seniors that were downsizing. Well, now a
mhm,
family that's, expanding is going to buy that home. And so it's kind of this, balances, and that's not happening right now because they're not selling.
yeah, oh, yeah. I mean, completely. I even read an article where a lot of people are just paying cash for properties now.
Yeah,
They're taking whatever equity they had and any other assets and just paying cash.
I know.
But
It's crazy.
yeah.
So, Anthony Banks, given the current high rate environment, are you seeing more buyers looking at an ARM option compared to a traditional loan?
No, Anthony, we aren't. Right now, a lot of that is still inverted. And so, a lot of times, and, depending upon obviously where you're looking, but, right now, 30-year interest rates are a better option than a 5.1 ARM. Just ARM products really haven't been there, at least not within our marketplace. Now,
Right.
obviously, banks may have, different offerings, but within our side of just in lending, more or less. I mean, it's all 30-year fixed mortgages at this point.
So, what are some of the programs that you guys do offer? Because, right now, obviously I'm a realtor.
Yeah.
I also follow a lot of realtors, and
Yeah.
I see all this stuff going online on Instagram, on TikTok, all the places, because realtors are going to make content and they're going to say things. And
Yeah.
sometimes I'm like, oh, I love that. And sometimes I roll my eyes and think, God,
Yeah.
I see this one that I continually, people are trying to get creative in their financing, and they're talking about don't ask for seller concessions in the form of closing costs, take seller concessions and ask for like a rate buy down. Is
Mhm.
that something that you're seeing happen often? And what are your thoughts surrounding that? What are some of the other, programs?
Yeah. So really in the marketplace, the buy down has come back. So the 2-1 buy down, where let's say the given rate is 7.25, a 2-1 buy down would be the first year the client would be or the client would be making payments at a 5.25 interest rate, so 2 points below. Then the second year, you take the one, so in the 2-1, it would be one. So as opposed to 7.25, the second year, they're making the payment at 6.25.
Okay.
And then by the third year on a 2-1 buy down is now they're making the note payment at 7.25. And
Okay.
so it is a seller paid. The seller has to pay for that 2-1 buy down. But let's say that cost, let's just assume a $650,000 house. Let's say that 2-1 buy down is, let's say it's $12,000. So that money kind of sits into like an escrow account. And
Okay.
so let's say by year 2, yes, they have been making payments at 5.25. Let's say rates drop to 6%. Well, and they want to go ahead and refinance it. Well, hey, that money that's sitting in escrow, basically, let's say there was a $12,000 where just a little bit each month comes out to basically
Right.
make the difference in payment between whatever the payment is at 7.25 and 5.25. And
Okay.
so at year 1, if there's $8,000 still left in that escrow account, well, hey, it's going to go to pay down your principal. And so at
Okay.
that point, hey, that's about the average cost for closing cost on, say, a $600,000 or $700,000 home. So essentially, hey, you can refinance for free at that point. Or really, if you want to take a look
That
at it, the
money.
seller paid for it.
Yeah.
And,
So you're not losing anything.
you're not losing it. Yeah,
Yeah.
correct. It's another real popular one, which is about a third of the cost. So if you are in a situation where maybe you can negotiate a little bit with the seller,
Hmm.
there's a 1-0 buy down. And so that would basically say, hey, the rate today, 7.25. Well, hey, for the whole year 1, you would be making payments at 6.25. And it's about a third of the cost. So it's a little bit more affordable, and maybe the
Okay.
seller would be able to, you'd be able to negotiate that with the seller. But
Right.
that's a pretty popular thing, and
Okay.
so, and again, if things go as the crystal ball, says, then hey, maybe by year 1, you've got an opportunity to refinance that into a rate that starts with a 5 or a 6,
Okay.
but it gets you away from that scary 7, or,
Yeah.
I don't think we'll get back to the 8s, but, but it gets you away from the higher interest rate, at least for a little bit. So,
Right. No,
yeah.
I love that. So this next comment, y'all, this breaks my heart a little bit. I'm a Gen Z. I'm almost certain a house is darn near unattainable, kind of. Um, I can honestly understand 100% why you would feel that way, especially the last couple of years. I feel like it has kind of psyched people out. It reminded me of, were you around? So I don't know. It's not really a big thing as much anymore, but like I remember growing up, there was the Friday after Thanksgiving sales. And I remember my mom and my grandmother would get us up at like 4 o'clock in the morning and we would go shopping. And there would be lines of people outside these stores. And right inside was like, the door busters, and they'd just be snatching them. And people would fight. I mean, it was crazy stuff. And it doesn't happen as much anymore because now we all shop on our phones and on our computers. But I used to think, like, holy crap, is the thing that good? Or are y'all just fighting because, like, I remember my mom one time telling my grandma, grab all of them. And they didn't even really know what they had. You know what I
Yeah.
mean? I felt like that's what we were in the last couple of years. And people were just like hustling to get out there. And it was like, once the dust cleared, do you like the house? Are
Yeah.
you happy
Yeah.
to be there?
Yeah.
But it's not that way as much right now. And I do feel like there's been kind of years of builders not building as much. And so we're playing catch up. But I do feel like, and Tyler, you've actually said this yourself, that owning a home is going to be like owning a piece of gold. So tell me your thoughts there, because I loved that. I agree.
Yeah. I mean, yeah, I mean, I kind of like it. I mean, like our caller or your person on YouTube had mentioned, it's they feel like it's an unattainable, and if you look around, there are a lot of new builds going on, but at the same time, there's a lot of apartments being built right now,
Mhm.
and
Yeah.
so I would say don't give up. Having that piece of gold, I mean, it's worth it, ultimately, because, hey, it is a true asset that is going to continue to grow in wealth, and it's going to help you.
Right.
I mean,
And nobody
yes,
can take it away from you.
no one can take it away from you. Exactly. And
Yeah.
so really it's just working with the right people and having a game plan. And that's where myself and Ashley come into play. And yeah, maybe it takes a few years, but if you've got a game plan, I definitely think it's worth, sticking to. Because ultimately, again, I think at some point owning a home is going to be like owning your own little piece of gold.
I mean,
Um,
I look at California and New York, and yeah, I've had a couple of clients recently that moved out here from they moved here to Georgia from California, and talking about that piece of gold, like you said, we started talking about, they had rented for like 20 years in California. And
Yeah.
they said it was because you couldn't afford to purchase. And if you didn't, like your parents owned property and then they deeded it over to you, if it didn't somehow come down like from the family, or, you owned it for 20 plus years, right now, there was no way for them to afford a home. And so to me, that's looking at that pot of gold, right? Like if you
Yeah.
didn't have that pot of gold passed down to you, or you were able to somehow, purchase it and hold on to it for a long extended period of time, it seems unobtainable there. And so I feel like trying to get that house, if it's your first house, if it's your move up house, nobody can take that away from you. And I feel like that is so, so important to have, because apartments can raise rents, they
Yeah.
can change. You may not like, your neighbors, things like that. And having your own home is just literally a tool to build wealth over time. Um, it's one of those things that I don't know. I feel like people, get in their mindset if it's unobtainable, but you just have to really want it and go for it, and find the tools. I know we have another question here, and this is one that you and I had talked about before. Tyler, I've heard about agricultural loans for quite some time. Can you elaborate on that program?
Yeah, so you have what's called USDA, and USDA loans are out there, and they're suited for rural spots within, any kind of area. So around Metro Atlanta, we don't have too many. I believe there are some pockets maybe in Gainesville up towards Dawsonville, and then once you get further out there, you can go beyond. But with an USDA loan, ultimately a lot of it is going to be capped by the number of the household, what that income is. But if you qualify, I mean, it's up to 100% financing. So, I mean, it's a great loan program if you're looking in that area. And again, if it's down payment or closing costs or anything like that is maybe something that, you're struggling with, or hey, I'm buying in this area, why would I give people money if I can just do 100% financing?
Right.
Completely agree with that as well. Yeah, it's definitely out there, but again, you would need to be looking at areas that are a little bit more rural. And I'm not exactly sure the website off the top of my head, but I know if you just do a quick Google search and USDA, I believe it's usda.gov, you can do a RE, so real estate lookup, and you should be able to find kind of certain pockets
Yep.
where you can see if that property is in a rural area. And then also you can kind of see what the income limits are for that as well. So,
Okay.
yeah.
Um, so one of the other ones that we talked about the other day, you and I, because I called you on this, um, because I was telling you that one of the things that I've thought about, just because, quite frankly, I have two young kids, and I've thought about one of the ways to build wealth for them is by purchasing a home now, because as the person that was tuning in was saying, is that they feel like it's going to be unobtainable. Well, if it's unobtainable now, to feeling to some people, what is it going to feel like when my kids are getting older? And so if I were to go ahead and buy something now and maybe rent it out, and then when they get older, I pass it on to them, they could live in it, they could sell it and use the money for college or marriage or whatever they want to do, they could sell it to buy their own home. It's just another tool of building wealth. And one of the things that I had seen was that if you buy a multi-unit property, so like a duplex or a quadplex, something like that, that you could have a little bit different financing. And for somebody, I know, let's see, where's that comment? One of my uncles told me he bought his first house at 25. I'm 24 as of this. So yeah, my uncle is in his 50s now. Well, I bet if your uncle started at 25 and he's 50 now, he probably is telling you how much real estate helped him throughout the years. And so I feel like this product that you and I talked about the other day is perfect for somebody like this. If I was still young and either single or just got married,
Yeah.
didn't have kids to really worry about like moving them around, I would totally take advantage of buying, a duplex or
Yeah.
a quad because of that financing. Tell me about that.
Yeah. So Fannie Mae just recently changed their guideline to where if you are buying a 2 to 4 unit property, whereas previously that down payment could be anywhere between 15 to 25%, depending upon how many units there are. Now they've changed it to where if you are going to live in one of the units, you can get in as little as 5% down. So just imagine that, you
Yeah.
live in one of the units and let's say it's a quad and you have the other three rented out. Well, hey, that's probably going to cover the mortgage payment, just in
Right.
your rental income coming in. And the thing is, we can use that potential rental income to offset that mortgage payment, to help you qualify for that loan.
So
And
even
so
if you're not making a ton of money, you
yeah,
can use that rental income from the other properties as kind of to offset that?
exactly, to help you qualify for the mortgage. And so just imagine that, let's say you're 25 and you're living in this quad, and let's say life happens, you get married, you move off. Well, hey, now you've got this 4 unit quad that you obtained with just 5% down. Imagine if you were able to hold on to it and then move to your next home. And let's just fast forward. Now,
Yeah.
that's just another stream of income,
Yeah.
another asset that's, gaining, basically value each year.
Yeah.
I think that's a great for a first-time home buyer. And then you even took it up another notch, which I thought was fantastic when you had mentioned, well, what about, my daughter who's going to be going off to college soon? Could I sign with her? She would live there as her primary residence. And
Right.
so could we put 5% down? And you can have a non-occupant borrower. So for those individuals who have kids that are high school age, just imagine if, let's say they're going to, I don't know, just because I love University of Georgia, let's say they're going off to Athens
Yeah.
and you find a quad. Well, hey, buy that with her. Y'all are both on the deed. So now you can be a non-occupant borrower. She's
Right.
the occupant. You're getting in with 5% down. She has a place to live. And now you're renting out the other 3 units. And so now, hey, your child's housing is probably zero, or maybe
Right.
it's even making you money.
I know.
And then she's got a place to live. And hey, you could even just give that to her and she has that, or either, hey, you put it and it's in a college town. That's a great revenue stream right there. I mean, that was
That's
a
what
great idea.
I mean, think about how much you're spending on your child's housing when they go,
Yeah.
to college anyways. But, that just seems like a no-brainer if you can find something like that to nail down. That just seems like an awesome option to do, because if you're going to be paying for their housing anyway, why not be making money off of what you're doing? So I loved that option. I know
Yeah.
some people have talked about, and this is something I go back and forth on. I've had some people recently talk about, well, can I tap into my 401k? And it's interesting because Anthony actually sent me an article, and I'm going to pull it up.
Yeah.
um, Buying a house isn't happening. So they're spending and saving differently. And when I read this article, honestly, it made me sad. And I'm praying that this is just typical mumbo jumbo that, the people like to talk about. It's always doom and gloom in the news. It's nothing ever positive. I don't know why. But um, when I was reading the article, it talks about that people saved up all this money to get a house, put a down payment on the house. And then now they've decided, well, it's unobtainable. So I'm just going to blow all that money and I'm going to go buy other stuff, or I'm going to buy a car, or, I'm going to spend that money. And that just sounds incredibly irresponsible to me, because if you've taken the time to watch your pennies and put them together and get a down payment for a house, why would you go and blow this? And so let's just say that you don't have quite enough, and so now you're feeling, maybe like it's not obtainable, and so you say, well, can I dip into my 401k? What are your thoughts on that? I know you can do it. Is it a good
Yeah.
choice, and how does that work?
I think it's a great decision. Now, there's two different ways you can borrow. Well, you can two ways to access that money. One, you could do a loan. So you would basically basically you're just borrowing your own money. That's really all you're doing. Now, yes, you are making interest payments as well on it, but that money is repaid by back to your employer before taxes. So that money isn't being taxed.
Okay.
There's another way where you can withdraw it, but depending upon your age, I probably wouldn't suggest that route because you would pay penalties on that.
Right.
But again, I'm just a mortgage guy. Definitely talk to your CPA and or financial advisor. But yes, we run into that a lot, especially with first time buyers.
Right.
It's a great way, especially the loan. I mean, if the
Yeah.
money's sitting in there, it's your money. You're just borrowing it.
Right. You're
The
borrowing from
interest,
yourself.
yeah, the interest rates are favorable, and you're paying it back pre-tax. So it's and repay it. And if it's a larger amount of money, you can get a longer term on it. So it's nothing that it's kind of like that car payment. You don't want it, but once you have it,
Yeah.
you don't even think about it anymore.
Yeah. And if it's getting you to get that first home under your belt, I feel like then you start to getting that first home is the hardest one. And then from there,
Yeah.
it seems to really help you just kind of build on that because then you're able to sell and make, equity gains from that to help you, to
Yeah.
your next purchase. Another one that I've heard people talk about is the 1031 exchange. And I know a lot of people get really confused on this one. Help us break down the 1031
Yeah.
exchange. And is this something that you're seeing a lot of right now?
Yeah, so the 1031 exchange is a great product, and I've looked into it myself. I own a rental property, and it's in suburban Atlanta, and I'm always like, you know what? I would love to sell that property and maybe buy something in the mountains or on the beach. That way, I can get some personal use out of it, and at the same time, still have that rental income. And if I were to do something like that, I would basically sell the home, put the proceeds into a 1031 exchange. And so by doing that, I'm sheltering the capital gains taxes that I would have to pay on it. The caveat is that you have to reinvest that money back into real estate, and it can be a
Right.
primary residence. It's got to be another rental property.
Okay.
And so you have some pretty stringent timelines on that. You've got about a 45-day window where you have to identify a property, and then you have to close on that property within 6 months.
Okay.
So there are some kind of stringent points to it that can make it a little bit difficult. But
Right.
if it's something where you've kind of already identified a property, it could be a great tool because, again, depending upon where your tax bracket is, that capital gains taxes could be 25 to 35%. So,
Right.
yes, in my mind, I'm thinking, hey, I'm sitting on X amount of equity. Well, what I'm not really thinking on is the government's going to take about a third of it.
Of course they are.
So,
They're
uh,
going to make sure they get their piece.
yes. So a 1031 exchange would be a great, let's say you have a rental property and it's gained tremendous value over the last year or last several years. And let's say, hey, now maybe you're thinking about selling it and maybe taking that equity and buying multiple, properties. That way you're basically don't just have one, but now
Yeah.
you've got maybe three or four. And you could look to do that, so that's another good way in looking at it as well. Using that money, let's say you've got, let's say $200,000 in equity and you wanted to buy, four $200,000 homes. Well, hey, 20% on each one, that's a good way to use that equity, so
Yeah.
now as opposed to one, you've got four.
So you
Uh,
can split it up.
you can, yeah. So,
Okay.
like I said, you just have to identify those properties within that 45-day window. And so that's
Right.
kind of where it gets a little bit tricky to do it.
Right. You're
Yeah.
you're kind of hustling as far as when you sold one, you're already looking for the next one
Yeah,
to be able to put that in place.
exactly.
But I mean, that's a great way for you to continue to, reinvest in real estate. So, what happens when you're on the final property? You don't want to do this anymore. You want to get out, you want to sell or whatever. Can you deed that property to a family member or do you have to sell it?
At that point, I mean, if you're done with it, I mean, really, there's no way once you're ready to sell, at least to my knowledge, there's no way to get around the capital gains taxes. I
I
mean, I'm
figured.
sure maybe we could get a financial advisor on here
Yeah.
who may be able to talk to us about other avenues that maybe I may not be aware of. The only way to get out from having to pay those capital gains is if you were to basically say that's been my primary residence 2 of the last 5 years. So
Okay.
unless you wanted to move into one for a few
Right.
years, then you know,
Hey, to
uh,
get past the taxes, I
yeah,
might just try it.
I know, yeah, yeah, I've thought about it myself. So yeah, yeah.
So one of the questions that just popped up, does Georgia have a homestead exemption? I know Florida does. Yes, Georgia does have homestead exemption. So you file that. So like if you purchased a home this year, then you would go ahead and by April of next year or March of next year, you would go ahead and file that homestead exemption so that you're getting a break on your taxes. And then depending on what county you live in Georgia, there's also senior exemptions. So I know that you're not going to qualify at 24, but for those of you that are getting, in our happier, relaxed years, there are also senior exemptions where you're not having to pay school taxes. Depending on what county, it could be 62 or 65. But I have realized throughout the years that those school taxes are like half of the bill. Those things
Yeah.
are a foot of the bill.
Yeah. No,
So when you
completely.
get to take those off, it's a pretty good chunk. Anthony, as an accountant, I'm covering up my ears and hearing about possible tax evasion. No, we're not doing tax
Right.
evasion. We're following the law very closely, Anthony. That's what we're making sure that we do. And that's why
Yeah.
Tyler was specifically saying to get a financial advisor in
Yeah.
here, because we are not those tax people and we will not make sure that we do any of those things.
Yeah.
So Tyler, I appreciate having you on so much. I feel like you've just been a wealth of knowledge for everybody, myself included. I appreciate you always being there at my beck and call when I'm calling with questions, and always just helping people find the best situation for them in the most creative way for them. So I appreciate you coming on here tonight. I know all of our guests do as well.
My pleasure. Thanks for having me.
All right.
Always.
Well, I'm sure I will probably talk to you
Yeah.
tomorrow. Everybody, I'll talk to y'all not next week because next Thursday's Thanksgiving, but I'll see y'all the following week. Everybody have a good night.